It is your boy Spyhawk, and today I'm going to teach you guys how you can maximize your profits when investing in the stock market. Now, we all know that there's different types of markets you guys could invest in, whether it's real estate, stock market, and there's always ways to maximize profit. Like I said, guys, it's very easy to get into a stock. Like, for example, Apple. I want to buy Apple because I have an iPhone and I have the AirPods and I got everything. Let's buy it. But is that the smartest thing to do, especially as a beginner? No, there's ways. I'm going to teach you guys 3 ways that you guys can definitely have an upper edge on the market. Now, the first way that you can have an upper edge on the market is technical analysis, guys. Technical analysis is something that it happens. Technical analysis is determining support and resistance levels in stock. It's the simplest way to put it there. Patterns tend to repeat themselves in the stock market. It just happens. Like, for example, let me show you guys on Roku. You guys can see this pattern. Let's go 15 day. A resistance and a support is where a stock tends to bounce from. So let's draw it out right here so you guys can see, for example, what I'm talking about. So you guys can see the stock's going down right here. You can easily draw out the support right here. You guys can see it tends to hit lows right here, goes up, tops out over there, tops up again, hits low below. Now, why would you enter here when you could have entered here? Does that make sense? So, like, if I'm trading right here, why would I enter here when I could wait for the pullback, as previously in previous supports has stopped here? And that's perfect. Like I said, guys, you can miss out on an opportunity like this and turn up what should be a profit into a loss because of a lack of patience. See, that's 4% you would have gave back. And if I do it, let me extend it, and to show you guys that patterns do tend to repeat themselves, let me extend it here to the left. Now, without even looking, right? Extending it to the left. Let's go back to the 180. The same channel I drew. Look at that. Didn't I not say that previous supports are previous resistances? Look at this. It was a support here, and look at this. Topped over here, and it was a previous resistance without even having to look at it, guys. Like I said, patterns tend to repeat themselves, and it's something that you can do, whether it be a simple channel. There's different channels you can draw. You can draw support. For example, look, even right here, you could draw supports different ways, whether it's horizontal, right? It can be horizontal, where the stock goes up like this. It can be channeling down, like stated here, or channeling up. So there's different ways that a stock can bounce off of. That's just some examples, but there's a lot of things that go on to it. But simple technical analysis in that way can really give you an edge, because it's like buying, for example, a Rolex. Why would you buy a used Rolex at the new price when you could lowball the guy and then sell it at that price, a little higher price? See, it's the same concept in the stock market. You want to do just that, especially as a day trader or a swing trader. You want to be able to maximize your chances as much as possible, because unless you want to long-term invest. If you want to long-term invest, is you buy a stock and you hold it for the year, but you still want to get in at a good time to buy. For example, Netflix is another one. For Netflix, you can see here that it's just uptrending. Now, why would you get in it when it's up here? You guys can see based on indicators. Now, that's my second one that you can use, is indicators. Indicators are a great way to tell you about a stock's movement. Now, it's not a way to rely on, but it can tell you right here. For example, the stock, like right here, I use RSI. The stock clearly right here in the red shows that it's overbought. When a stock is overbought, it means that it's time for it to pull back. It's time for it to gain more. So you guys can see it hits the red zone, and you can see it starts coming down. It's a pullback, and then it continues. There's always pullbacks, and the MACD also is another one that tells you the strength of it is. You guys can see clearly right here that the strength of this is just super overextended. You guys can see it's away from that. There's another indicators are also great ways to get an upper edge in the market. And you guys can see too that you guys can see here, I'm using the SMA line. Now you guys can see based off of the 180 day 4-hour chart that SMA line, which is given by this green line right here, acts like a support and a resistance as well. It acts as its own. And like right here, you can see draw little channels right here, and you guys can see, look, it shows, look, resistance right there. Well, guess what happens over here? Resistance over there. And then now that same line that we're talking about is now broke above it, and now is acting as a support. Like I said, guys, patterns tend to repeat themselves in the stock market, but one thing you don't want to get fed up with is that because they tend to repeat themselves doesn't mean that they have to. Like I said, guys, there's different news that can come out. There's different things that happen in the market. Different news. Like I said, Netflix could have had a great quarterly report. Great news, right? Shoots up. Or a bad report shoots down and completely can break the trend. So that's one thing you guys got to keep in mind. But as long as you stay that, you guys can see this SMA line acts as a support. Boom, bounces off. Boom, bounces off. And guess what's going to happen? It's going to rally up, and then boom, I guarantee you guys it's going to go up. Boom, bounce back on the SMA. So if you're going to long-term Netflix, then I would wait and set my alert right here. Set alerts, you guys can see at or below. And then just wait for that pullback. And just keep an eye on, wait for that pullback, because it eventually is going to pull back. Whether it be, like you guys can see here, earnings just completely shoot it up. And like I said, guys, the RSI completely shows it's overbought. I mean, look at this 4-hour candle, just a straight 20% move. That is huge. Now, you guys can clearly see the indicators are telling you here. They're red. It's overbought. All right, caution, caution. You know, that should mean caution. This thing's due for a pullback anytime soon. And look at that, just aggressive sell-off. All 4-hour candles just straight selling off. And the MACD shows it too. Look how far away this is from there. It shows that this blue line is just super overextended. And when it crosses this signal line right here, then that should be a time to sell if you're holding it. But either and then, you should have cut losses at this point in another way. Which brings me to my third thing. Managing risk, guys. In the stock market, it is inevitable to not have a loss. Losses are going to happen. Even the best traders, day traders, no matter you name it, will always have a loss. You need to have some sort of strategy, some sort of, like, I guess, risk management to be able to manage that loss. Because at the end of the day, it makes sense that you want to use your account and use your hard-earned money that you funded with to raise it. And if you have a red day and you bag hold it, then all your profits that you could have had just went down the drain. Because why? Because you're in the hopes of, the stock's going to rally up, but it didn't. Like I said, guys, just because patterns show that they did doesn't mean that it has to. So you always got to keep that caution in mind. Whether you set a stop loss or set a mental stop loss, that's always a great way to manage that. But like I said, guys, risk management is huge in the stock market, and you will never, ever be successful in the stock market if you don't manage your risk. Risk is something, whether you should never risk. Let's say a good risk percentage is, I usually set mine to like 3%. 3% of my account, I'm gone. Just because you go any further, you go 10% down, and that's a whole week. You know what I mean? That's a lot of time being just drawn out, and like, it's very hard to almost get back to even want to trade after, especially for bag holding. You can never have your hopes up in the market. You always got to keep calm, keep cool, keep collected. Like I said, simple technical analysis, a couple indicators, and you should be good. Like I said, I also like to use a VWAP as an indicator, because the VWAP tells you when a stock, if it's trending up or if it's trending down. For example, we use Roku, and you guys can see the VWAP is given by these three lines right here. The orange, the purple, and this. You guys can see that when the VWAP also acts as its own support and resistance. You can see it gets rejected and it goes above the EMA. That's a good sign. That means it's towards an uptrend. If it trades below the EMA, it's below an uptrend. If it trades above the purple line, which is the top part of the VWAP, then it shows great potential in the stock towards an uptrend, because it's in a good uptrend territory. So this area right here is good uptrend territory. Now, if it's trading below these two, then that means downtrending, you should have caution. Now, it doesn't mean because it's downtrending, it should still go up, but just keep in mind that that middle VWAP can also act as a resistance, and it'll mean that the stock can bounce out from there and come back down. So just have a strategy in mind before you enter a trade, especially if you're day trading and swing trading. Have in mind what you want to do before you place the trade. Where are you going to enter? When you're going to exit? And when are you going to cut losses if the trade goes south? Keeping that in mind, guys, a simple technical analysis, simple use of indicators, whether it be the SMA line, the simple moving average, the EMA line, the exponential moving average, or the VWAP given by these three lines, and a simple drawing out of channels and support and resistance levels, along with risk management. And I guarantee you guys, this will be the way to maximize the most out of your money and gain those profits that you have always wanted to achieve. Now, like I said, guys, there's more in depth to this. There's more extra indicators to this, such as the Fibonacci. Now, Fibonacci is very great to define. Like, you guys can see the Fibonacci. Every time you draw a Fibonacci, it's known that when a stock pulls back, it comes back to the 50% level. And you guys can see right here, a little stretch right here. You guys can see, where did it bounce off of? Look, almost to the tick. Look at this, right to the blue line. And that's gonna be the 50% level, and it could also bounce up to the 38. So at the 38.2, the 50%, or the 61%. You guys can see here by that orange line. Now if we zoom in a little more, you guys can see, look, almost to the body. Look at that. That's insane. Like I said, guys, Fibonacci is an advanced tool that's great to use with great power, given by, if you trade it like how I like to trade it, blue's the entry, yellow's your stop, and the green's the target profit, guys. And like I said, with that in mind, that's a whole nother video, because that's a whole nother subject to talk about. It's very in-depth, very detailed. And like I said, guys, if you guys enjoyed this content and liked what I have shown you guys, don't forget to drop a like and hit that subscribe button, and stay tuned. If you guys, let me know in the comments below if you guys want to see some more trading videos. I know I also do gaming on this channel, but hey, guys, I'm also a trader, day trader, swing trader, and I'd like to inform you guys as far as my knowledge of what I have done over the stock market. And like I said, guys, if you guys stay tuned for future videos, and let me know what you guys want to see. If you guys want to see more future trading videos, I would be happy to be able to explain any questions that you guys may have. And as always, it's your boy Spyhawk, and I'm out. Peace.